What I got, you can't buy. It resides between my eyes. Walked through the fire, came out better on the other side. See, life's like a beach if you find the same. And right now, I'm feeling like 100 grand.
You are listening to Inspired Insider with your host, Dr. Jeremy Wise.
Dr. Jeremy Weiss here, founder of InspiredInsider.com, where I talk with inspirational entrepreneurs and leaders. Today is no different. I have Michael Zavet of Shieldify. And Michael, before I formally introduce you, I always like to point out other episodes people should check out of the podcast. Since this is part of the SaaS series, there's a couple other episodes to check out. I interviewed Wade, the co-founder of Zapier. That was a great interview. They talked about, the journey, and it's quite a journey. Pipedrive. When I had Michael on, I think they had 10,000 customers. Now they have over 100,000 customers. So it was really interesting. Aweber, Tom, the founder of Aweber, and then another one was Mailshake. I had Sujan Patel, and they grew to, I think, over 70,000 customers. And they've been acquiring companies too, which was an interesting journey for them. And shout out to Sam Moses of Socrates. It's in the B2B space, not a software, but they do custom socks for clients, referral partners. I'm going to definitely be buying some. So everyone can check out Sam's site, Socrates. Cool. It's a really cool product. And this episode is brought to you by Rise 25. At Rise 25, we help businesses give to and connect to their dream 100 relationships and partnerships. And the way we do that is we help you run your podcast. We're an easy button for a company to launch and run a podcast. We do the accountability, the strategy, and the full execution. For me, Michael, we call ourselves the magic elves that work in the background to make it look easy for the host and the company so they can create great content and great relationships and run their company. So for me, the number one thing in my life is relationships. I'm always looking at ways to give to my best relationships. I've found no better way over the past decade to profile the people and companies I most admire and share with the world what they're working on. So if you've thought about podcasting, you should. If you have questions, go to rise25.com to learn more. And big thank you to Nick Penov, who is a master of partnerships. He actually introduced Michael to me. He does management for a lot of companies, Hello Tax, and they have a product, Scale, SCAYUL, and you can check that out too. I'm excited to introduce Michael. Michael Zavet he's a serial entrepreneur. He's co-founder of Shieldify. Shieldify is an AI-driven software and technology company addressing fraud and chargebacks in e-commerce. You spend all that time, energy, and money getting a sale, and then someone charges it back, and that company should probably ship the product. They spend a lot of time and energy in the customer service of that product, and they help people collect what they are due, right? So, Michael, thanks for joining me.
Thank you for having me, Jeremy.
So, talk a little bit more about Shieldify and what you do. And while you're doing that, I'll bring up, if you're listening to the audio, there's a video piece, and I'm going to share a little bit as he's talking.
Yeah. So, you hit the nail on the head. One of the big issues for a lot of merchants is, they fulfilled a product or service, and then the customer goes ahead and charges it back. And sometimes, it's a sincere misunderstanding. Other times it's what we call friendly fraud. And sometimes it's actually just fraud. And essentially, our goal is to help companies claw back some of that hard-earned revenue and mitigate their losses. So, as an example, when a company handles these things internally, as a lot of them do, they're spending quite a bit of time and resources doing that. And sometimes that doesn't end with a good result. And the average person takes 45 minutes to an hour to compile what's called an evidence package to dispute a chargeback. The reason for that is you're jumping from, your various platforms, whether it's your CRM, your payment processing, your 3PL, or your customer service, and you're, looking for and compiling the data to produce a good evidence package. Now that's time consuming. So what we've done is we've taken it a step further and built out technology that automatically aggregates all of that data and then compiles it into a effective evidence package, a compelling evidence package, as we call it. And then the goal for us really is to become better and better at doing that with time. And the way we do that is by leveraging AI and LLMs. So essentially, each time a dispute is submitted and we get the feedback for that dispute, we learn, who's the payment processor, who's the issuing bank, what's the product, who's the customer, and all of that goes into our data bank, which helps us constantly get better at this.
Who are ideal? I mentioned e-commerce at the front. Who are ideal customers for you?
Yeah, so our sweet spot today is e-commerce. We're a fairly young company, so we've found success there for sure. And e-commerce can be anything from physical goods to digital subscriptions to reservation bookings, like travel, etc., and other types of digital goods. We are looking at retail now as a new sector. It's not something we've addressed, but we're pretty confident that we can make an impact with retail as well. Slightly different process that we're right now figuring out. But when I speak to e-commerce, we're talking, everything from your Shopify merchant all the way up to other software companies.
What gave you the idea for this company? I mentioned, you're a serial entrepreneur. Why Shieldify?
Yeah, so it was from a personal experience. I had a nutraceutical company that was direct to consumer e-commerce, and we grew this company super rapidly through our relationships with marketers, etc. And then one day we got hit with what's called a TMF, a terminated merchant file. This was a alert essentially sent out by MasterCard that essentially made us unprocessable. So basically, all payment processors at that point are supposed to drop you. And they did. And then we were scrambling to get payment processing back up and running. It was an absolute nightmare. That was my first introduction to how important it is to stay on top of your chargebacks. And that all happened simply because we had a new marketing campaign that we had launched, and it had attracted a lot of interest, but all of a sudden we were getting a lot of chargebacks. Subscription businesses like this nutraceutical company in particular are exposed to those types of chargebacks almost all the time. But the truth is, and the unfortunate truth is, that chargebacks are a ubiquitous problem across any direct to consumer or any consumer touching business.
What are some of the mistakes people can, they should know about? Maybe they can avoid, maybe they can't avoid, but at least they could look out for them.
Yeah, one of the biggest mistakes that we see frequently is not having your terms and conditions straightforward and really correctly, compiled. So when fighting a dispute, many companies can point to their terms and conditions, and if they've clearly stated their sort of protocols and how their service works, then usually they have a better chance at winning that chargeback. Another thing is record keeping. So some companies just don't track the customer journey very well, and that's very important when it comes to disputing, because when you can show that a customer went through a very clear and concise journey where everything was communicated to them and they still filed a chargeback, you have a much better chance at winning that chargeback.
So those are the two biggest mistakes. I'm curious, because you're going in, right? So a company's like, okay, Michael, we need help. We got a bunch of chargebacks. What are some of the things, I don't know if your company does like an audit of their terms and conditions and what you're seeing, that what's in there that shouldn't be, or what's in there that there needs to be something added?
Yeah, absolutely. So I have a prime example for this. So what we do is, as we aggregate data, we provide reports to the companies we service, and those reports involve actionable insights. So we want to make them better at doing business. Essentially, our goal is help us help you, help us, right? Because if they have their ducks in a row, that helps us do what we need to do, and it also helps them. It helps their bottom line. So as an example, we had a company recently that was receiving a number of chargebacks related to refunds. And basically, they had agreed to provide the refunds. It was within their terms and conditions. The customer was in the right. They should have received the refund. But for whatever reason, maybe it was a gap in customer service, which is what it appeared to be, those refunds weren't issued in a timely manner. So by the time the refund was issued, the chargeback had already been filed and it was too late. Now, this all could have been remedied either by being more diligent with customer service or having a grace period within your terms and conditions that states you will be refunded within X amount of days. That way, both sides are clear on, what the sort of length of time before the refund is delivered. But in this case, they didn't state the time for the refund. So this customer waited, over a month to be refunded, and then ultimately filed the chargeback, and they were completely right for doing so.
Yeah. So communication was key in this situation. If they would have just been communicative, even if, obviously it should be probably in their terms and conditions, but even if they were overly communicating there, maybe the person didn't feel heard and they didn't get a response or whatever it is.
Yeah, that's right. The communication is super key when it comes to, service in general. And that's why it's so important for, merchants to have good customer service.
How hard was it? Because there's a lot of technology that's built on the back end. When you were starting this company, where did you start with the team?
Yeah, so we started, just the two of us, my partner and I, who's now my CTO. His name's Dennis. And Dennis and I initially connected. He was actually building it out for his own clients. He runs a dev shop with around 30 employees. And, they have a pretty solid list of customers. And they noticed after COVID in particular that the chargebacks had spiked and a few of them had, Stripe accounts shut down. So he saw an opportunity to make a few extra bucks for his dev shop. He had built out part of a dashboard to provide what's called chargeback alerts. That's a product that we offer today. It's from Ithaca and Verify, depending on which card you're using. But essentially, that product allows merchants to have around 12 to 72 hours to usually refund or address a chargeback before it actually solidifies on their merchant account. So it hasn't materialized yet. It's been filed by the customer. An alert is sent out. It will become a chargeback if you don't address it. And that was the initial plan, and that's what we built out to start. Then, as we started speaking to a wide range of customers, we saw that there was a gap or opportunity to service merchants that, they weren't worried about having their merchant accounts shut down. Their ratios were in line. They were fine there, but they were still losing money to chargebacks, lost chargebacks. And that's where we started to think about, how can we make the dispute process more effective and easier, and essentially become their in-house dispute mechanism. And so that's where we built out the dispute management platform. And of course, we saw an opportunity to leverage the evolution of AI to make that process smoother, cheaper, and more effective.
So, Michael, do you still have that? So there's a separate app that actually does the alerts, and Shieldify actually does the resolution, or is it combined into Shieldify now?
It's combined into Shieldify. They're just separate products. So we have some customers that are using both, and some that are using one or the other. It really depends on the company's strategy and what their biggest problem is. For example, we have some companies that aren't interested in disputing. They're okay to refund, low ticket price plus, their volume play. And so they're okay to just refund any dispute that comes through. And in that case, we'll do alerts for them. And specific types of alerts like RDR allow you to set rules. So, you can say transactions between these amounts or between these dates or with this, processing bin or CAID can be refunded. And so, yeah, it really depends on the merchant profile. And then we will find what product is the right fit for that.
From a dispute standpoint, obviously they can go to Shieldify from the chargeback alerts. Is that on like Shopify apps, or where can people find the apps for the alert piece?
Yeah, so that all goes through Shieldify. So alerts is something that you would require integrations, which we've built out, right? So we're integrated via API to Ethica and Verify, who provide all the alerts for all the major credit cards between the two companies, and they're owned by MasterCard and Visa respectively. So essentially, through us, you can simply reach out and we can register you for alerts. It's quite quick on our website. There's an info button or an email, and we can set up a quick meeting. The integration process is super fast. I mean, really, it's just an agreement. You provide us with a few pieces of information for alerts, and we get going. With dispute management, it's basically the same process, except what you're providing us is access to your, various platforms, your CRM, payment processor, et cetera.
You mentioned Stripe, and I was reading a post from someone I know, an entrepreneur. It seemed like, I'm not sure why, but it wasn't clear why their Stripe got shut down. So there was this whole thread of, he was wondering what other platforms are out there that he should consider. So I'm curious of what you've seen, right, from a diversification perspective. Obviously you probably recommend people have multiple processors. What are some other ones that people should think about if they're solely on, Stripe or something else?
Yeah, so I think to your point, it is important to have several MIDs, we call them, right? Merchant IDs, and spread across a few processors, because different processors do have different sensitivities. And sometimes things just aren't working out. It could be just a technical issue, or maybe it's a straight up account shutdown. So it's definitely good to spread out your transactions. The other processors beyond Stripe that we see a lot of our merchants using are PayPal and Braintree, which is owned by PayPal, and those are quite effective. Now, all three of those processors are low risk processors. So if you are in a category that is higher risk, then you may have to sort of look elsewhere. And there are processors that are more accommodating. For example, Nuvei, we've seen to be more accommodating than Stripe or PayPal. And of course, the fee structure does change as you sort of go up on the risk spectrum.
Yeah. But that was definitely, it's a painful conversation, right? I mean, people are scrambling. They may come, I don't know if in that situation where the person had that shut down, is that able to be reversed, or is that just a done deal at that point from what you've seen?
So it is to some extent reversible, but not practically. So in a TMF scenario, the only way to reverse it is by hiring legal and trying to come at MasterCard or Visa. And that is not easy or quick. They may be unresponsive, and to try to sort of muscle your way through can get very expensive very quickly. So it's not something that's accessible to every merchant. Some may be able to, but I would say that it's a fairly rare occurrence. Most of the time, a TMF it's done. It's a done deal, and you are now officially on that TMF list.
Let's talk about a few examples, Michael. So people can understand a little bit more. You had a D2C e-commerce subscription company. Can you talk about that company? And I think I had a 25% chargeback win rate. So out of the 100, they were getting 25 reversed.
Yeah, so this is our first client. They are a subscription company. To your point, they send out regular like boxes, right? And basically, when we touch base with them, I mean, first of all, they're doing quite well, around 25 million in annual revenue. So they're a solid company, doing good business. But their chargeback problem, it wasn't at a point where they were risking their processing accounts, and they were using Braintree and PayPal and Stripe actually. So they were in the low risk category, but they were still losing upwards of $10,000 a month chargebacks. Now they were also paying someone full time to manage those chargebacks, which was around $50,000 a year. So not small potatoes in the grand scheme of things when your win rate is around 25%. When we onboarded them, once we kind of got a handle of their systems, which didn't take very long, we got their win rate up to 100%. So today, every month they're actually retaining an additional $7,800 a month. And to top it off, it's a set it and forget it. So they don't have to really even worry about it. They're getting regular reporting from us. They're also getting data and actionable insights, how to improve their business processes. So it's been a huge win for them. I'm not going to say that 100% is usual. It's actually fairly unusual, But across the board, we've managed to increase our customers' win rate by a substantial amount. They were, of course, a golden case, but in general, we're seeing at least a 10 to 20% lift.
Yeah, I mean, if you look at the math on that, Michael, if they were, were getting 10,000 charged back and they were paying someone, 50,000 a year and they get 25%, they might as well just pay all of them off because they're losing money in that case.
That's right. Yeah. And to top it off with the chargeback, not only do you lose, potentially the product that you've shipped and the time put in, but you also get hit with processor fees because merchant processors actually hit you with a penalty every time a chargeback solidifies. And that penalty ranges. Sometimes it's small, like $15 per transaction. And then other times it's quite a bit bigger. So, it's injury to insult.
Yeah. I mean, I guess there's probably some other reason why, like, it just signals to the processor, like, these aren't chargebacks, but in their dollars and cents, they're losing money, 100%. by having someone handle it.
That's exactly right. So, it turns out like that there's a few leaks in the ship, right? It's the spending time and money when you can be reallocating those resources. And then it's getting hit with the penalties, and then it's getting hit with the losses of revenue.
How did you decide on pricing?
So pricing is it's actually one of the things that we talk about quite a bit internally, because it's a little bit complicated when you're starting out as a business and you really want to attract clients. You price low and you try to be very competitive with what's in the market. And that's what we did. We looked at sort of, what our competitors are offering. We believe we have a better product. How can we now make it interesting for customers and then prove that we have a better product? So, we came out with some pretty competitive pricing models. So we have two models today. One is on the dispute side, we'll do 10% of revenue recovered plus $300 a month, or we'll do 25% of revenue recovered with no base fee. And it really depends business to business. They can do the math pretty quickly on where their savings would lie. And then on the alert side, it's pay per alert. And that does range depending on the volume and profile of the customer. So there's no like set number per se, but we always try to be very competitive there. We know what the market is sort of demanding when it comes to alert pricing. So, we want to make a compelling argument to the client to either move over to us or to win their business.
There was another company that I think had $20 million per year in chargebacks.
Yeah, that's right. This is a new client of ours, our first enterprise level client, over $1 billion a year revenue business with a $20 million a year chargeback problem. This company is in the travel tech space. So, think all your bookings, plus they do some fintech as well. So, they're a company of scale. They're winning around 70 some odd percent. And they also have a full team, nearly 10 people that focus solely on these chargebacks. So with them, what we're doing is sort of a multi-pronged approach. One, we're trying to reduce their chargeback levels with alerts, specifically RDR, which is, rule-based alerts, because they know, for example, that they have a subscription product that experiences more chargebacks. So we can say, hey, this is your, these are the processors that are handling your subscription business. We're going to set certain rules based on pricing or other criteria that flags those chargebacks and just refunds them before they materialize. Then on the other side, we say, hey, we can bring your chargebacks up from, they were doing quite well. They were on a tight ship, but they were still winning, just in the low 70% style area of disputes. And we said, hey, I think we can get it upwards of 80, plus we can alleviate the amount of work for your team, which you can now reallocate to, other parts of the business where you need them. And so that's what we're doing for them. But where it gets interesting is we see an opportunity with enterprise clients to build very customized products that are unique to them, because unlike SMBs, enterprises tend to, have more unique processes and tools within their toolkit. A lot of the time they build out their own custom CRMs or, have other unique products that are not so cookie cutter. And so what we want to do is be very hands-on with them, create a very sticky relationship. And on top of that, going back to the data piece, when we feed them actionable data, and I can give you an example, we noticed that some processors, or I should say issuing banks, were siding with them more on disputes when it came to their subscription chargebacks. And so we were able to say, hey, you should funnel more of these transactions through those processors that are siding with you and reduce transactions with the ones that aren't. And that alone is a massive savings for them. We'll have the data on it soon, so I can't speak to it specifically, but I imagine that alone will, potentially save them even more money than winning the disputes.
Yeah, what's interesting is I'll have to send this to my friend Eric Due, who basically helps travel companies kind of see what the best rate they can get and helps with their merchant solutions, called Fair Merchant Solutions. But he always talks about how high risk the travel industry is as far as the processing goes. So there's a lot, I'm sure, for you both to talk about there. There was another one that it went from, which maybe seems insignificant to some, but when you're talking about actual money, it's not. They went from 70% went back rate to 80%. What happened there?
That was the enterprise company that we were speaking to just before, and yeah, essentially what we did was we took what they were doing internally, we analyzed what they were winning, what they were losing, and we fine-tuned it to improve their win rate. So it seems like a pretty simple solution, but it does take a lot of time and a lot of enriching data.
As you get these, there's a lot of resources that needs to be used when you're, a company onboards and you're processing a lot of data there. Talk about, in the beginning, do you decide to bootstrap? Do you decide to raise capital? And the kind of the pros and cons for you?
Yeah, absolutely. I've been in a position where, through my various ventures, I've done both bootstrapping and raising capital. And in the beginning of Shieldify, we decided to bootstrap because fortunately we were in a position where we were able to do that. And of course, not everyone is. And there's obviously no shame in raising capital. And, to some extent, it's also great to raise capital because, one, you get hopefully good partners involved, people who have a aligned interest with you and can help grow. And then the other part is that there's less personal risk, of course. So for us, the path in the beginning was bootstrap because we wanted to build out a product, and it's of course also more difficult to raise capital the earlier you are. Not to say that it gets easy in later stages. There's always going to be challenges to your business model or competitive landscape or whatever it is. But that being said, for us, we bootstrapped until we had a functional MVP. And then we went out and started, getting business and actually getting some revenue through the door. And that's where we decided for us to go from where we are today to where, not to say that this will take us ultimately where we want to go, but to get to that next level of technology, of sales, that raising capital was the path because we needed to have flexibility. And in order to get that flexibility, we needed, more capital available to us. So that's where we're at now. We just kicked off a fundraise actually in mid-December. We started and it's going well so far. We'll hopefully close that out by the end of Q1. And yeah.
Who's a good partner for you in that respect?
So we've been targeting primarily VCs this time around, and in the past, I've raised from everything from friends and family to institutions. We decided not to do the friends and family route because we really did want partners that could introduce us to potential clients and other partners. So for us, the ideal investor is someone who has a network of other investors that they can bring to the table, especially as we look at further rounds in the future, as well as potentially customers that they can bring to the table. Ideally, the more, especially enterprise level customers that they can bring, the better and more attractive investor they are for us.
I'm curious, as you grow, Michael, what are some of the features you added because the clients were demanding it? I mean, it sounds like you started off as the alerts and then it grew from there.
Yeah, that's correct. So we started with alerts. We identified that disputes were a big problem for a lot of companies, especially those that, again, were in the lower risk category. So we built out the dispute portion, and now we have to refine that dispute portion. When we talk about future products, now we've started building out the data architecture to allow us to really categorize and enrich the data that we're receiving. So data will be probably our next big product. And then after that, we have a few models that we'd like to test out. I can't speak to them yet because they're a bit proprietary, but there are some unique solutions surrounding chargebacks and disputes that we are planning to test out later this year. And then from there, we're going to look at other fraud protection services or client journey type products where we can accurately track a client's journey through to purchase.
Michael, first of all, I have one last question. I just want to thank you for sharing your journey, your lessons. Everyone can check out Shieldify.com to learn more. My last question is just any resources throughout the years that have helped you. It could be a book, could be a mentor of yours, and something you learned.
Yeah, I'm an avid reader, so there's a lot of great books out there. I would say that one is 0 to 1. That is a book that I've really enjoyed. That's Peter Thiel. Another really great resource for me is a book called Never Split the Difference. And I found that book by Chris Voss has been an incredible resource when it comes to sales and negotiation. I read the physical copy and I have it on audiobook as well. And I re-listen to it every year. So it's really a good one to study.
Yeah. I did an interview with Chris actually. And so people can check that out. And we got we talked about a lot of topics in an hour. So that's also, Michael, I totally echo that. That's one of my favorites as well. And I read it from a parenting perspective, not even a business negotiation perspective. If you have kids out there, there's a lot of negotiation that happens to when you want them to put their coat on or do simple things. So I actually read it because of that. But it is a fantastic book. So Michael, thank you so much. Everyone check out more episodes of the show and shieldify.com, and we'll see everyone next time.
Thank you, Dr. Jimmy. Appreciate you having me.
What I got, you can't buy. It resides between my eyes. Walked through the fire, came out better on the other side. See, life's like a beach if you find the sand. And right now, I'm feeling like $100 grand.